Welcome to our deep dive into the engine of the U.S. economy, the private sector, public sector, the stock market, and the mounting national debt. Let's break it all down. As of 2023, the private sector dominates the U.S. economy, generating about 88% of the total GDP. That's the lion's share. Here's how it breaks down. Professional and business services lead the pack, contributing around $3.5 trillion annually. Real estate, rental, and leasing come close behind at $3.3 trillion. Manufacturing adds about $2.9 trillion, still strong despite a long-term decline. Healthcare and social services contribute $2.3 trillion. Finance and insurance, about $2 trillion. Wholesale trade sits at $1.7 trillion, while retail trade and information technology each add $1.5 trillion. The arts, food, and accommodation sectors contribute $1.2 trillion. Construction builds up $1.1 trillion, and other industries like agriculture and mining collectively add $2.6 trillion. Now let's talk government. The public sector makes up about 12% of the U.S. GDP. The federal government contributes around $948 billion, with a big chunk going to national defense. State and local governments together add about $2.1 trillion, focused on education, infrastructure, and public welfare. The U.S. economy is a mixed economy, blending free market dynamics with government oversight and public services. It's this balance that shapes our daily economic lives. What about the stock market? It's not the whole economy, but it sure reflects expectations. When stock prices go up, people feel wealthier and spend more. When they drop, confidence falls. That's the wealth effect. Positive economic news? Stocks usually rise. Bad news? Markets often tumble. And businesses use the market to raise capital, funding new ideas and jobs. But there are big threats looming. Geopolitical risks, conflicts in Eastern Europe and the Middle East can disrupt energy supplies and trade routes. Rising tensions with China raise both economic and security alarms. Economic slowdowns and inflation, a slowdown in key economies like China or persistent inflation can shake global stability. Central banks walk a tightrope, adjusting interest rates to control inflation without stalling growth. Domestic challenges back home. Consumer spending has held strong, but for how long? Add in a high national debt, and the picture gets complicated. Speaking of debt, the U.S. national debt has ballooned to around $36 trillion, surpassing GDP, with a debt-to-GDP ratio of 122%, one of the highest in U.S. history. The costs. Annual interest payments could hit $1.8 trillion by 2035. That eats into funding for things like education, infrastructure, and healthcare. High debt also weakens our response to crises and pressures programs like Social Security and Medicaid. Global fallout. If investors lose faith in the U.S. dollar, it could trigger worldwide instability. Imagine a global economy unsure whether the U.S. can manage its own finances. Solutions? They'll take fiscal responsibility, policy reform, and, ideally, bipartisan cooperation. Reducing deficits, adjusting taxes, and promoting growth are all on the table. Here's a quick look at how much each president since Reagan has added to the national debt. George H.W. Bush added $1.55 trillion. Bill Clinton added $1.4 trillion. George W. Bush added $6.1 trillion. Barack Obama added $8.33 trillion. Donald Trump added $8.18 trillion. Joe Biden added $7 trillion as of September 2024. Debt growth is not a partisan issue. It's been rising under both parties. In the end, the U.S. economy is a complex system powered by private innovation, shaped by public policy, and influenced by global forces. The stock market may not tell the whole story, but it plays a critical role in shaping the narrative. And while our debt poses real challenges, solutions are within reach if we're willing to face them.